So traders, one of the things about these markets is momentum is really important in these markets, and the market will drag wherever the momentum is, whether it's up or down. The momentum will drag this market most of the time with that momentum, regardless of what the market is actually doing right now. And I'm seeing that a lot around these markets, and what's actually happening around these markets. And that's what I want to walk you through with today about the momentum of these markets, and not only an update, but how you can utilize this to increase your chances of having a successful trade and potentially a big profit successful trade. And this is one of the rules that I utilize in my trading. And you'll find more information about that, guys, in my free trading course I'm giving away. There's like 8 videos long there. There's so much in there. I even go through the major crashes and the topping patterns and my trading systems and biggest mistakes you're making and so much more. So that first link in the description there, guys, you can grab that to get access to that. So the theme of this video here is not just from a market update perspective, but from a perspective of increasing your chances of having a successful trade. Is I'm always looking at momentum. And one of the most powerful things that I've learned is that if momentum is trending in either direction, either up or down. Now momentum, how do I define momentum? I use the moving average. And so I use a 52 on the daily, and I also use a 24 on the weekly. Okay, so these are the different moving averages that I use to see where is the moving average going right now. Because when we have the moving average moving in any direction, either up or down, we tend to have what's called strong momentum, and we want to be going with the momentum and not against it. Not just from a market update perspective to see what's going on right now, but from a trading perspective, right? So what you should be looking for. So if I look at this, if I'm bringing up this chart here right now, this is the health sector, the XLV, and I'm just utilizing this as an example of what's happening right now, but as we can learn back here. And so if we go back here, as you can see, all through, say, this section down the bottom here, see how the moving average was trending all the way up, trending up, trending up, trending up, trending up, trending, all the way trending up. Now this is for 4 years of trending up to the upside. Now, if I go back to that time though, let me actually go back to that time. As you'll be able to see, that there were many times where we had what? Where we actually had, a 7 to 10% drop. This one here was, another 7 to 10% drop. You get these sideways periods. So sometimes what we can do is we can look at the daily charts to see what's going on. And I like to use the 52, and I'll get to that in just a minute. But one thing I'm always trying to do is I'm always trying to see where is momentum. Because if momentum is strong, there's either two types of momentum. There is flat momentum, where the moving average would basically be doing. See how really the moving average is really sort of flat through here. It's not really going up. It's not really going down. But then you have this strong momentum all through here. That's very strong to the upside. And then there might be momentum like that where it's very strong on the downside. So momentum tends to carry the market regardless of what happens. So what tends to happen a lot of the times is, even though we might get this here, and this is a weekly chart. So that's 1, 2, 3. Even though we get a month worth of drop to the downside, we end up getting a pop back to the upside. Even though we get a month to the downside, we get a pop back to the upside. Big drop here, pushes it back up. And so you can see that as the moving average was trending up through here, drop, moving average trending up, pop. See, as we go along through here, we can see how it actually continues to go with it. It's not until the moving average starts to flatten out that we know something is actually now starting to be wrong with this bullish market here. So we can see that's what we're going through here. And what can tend to happen a lot of the times is that if we get a movement to the upside. So I'm looking at what's happening on this. I'm utilizing this as an example right now. So as you can see in the past, the moving average was what? Very strong to the upside, wasn't it? So we actually had 1, 2, probably about a couple of months worth of not much going on, but then we had a move back up. What's happening right now with the moving average? The moving average is trending down, isn't it? So even though we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, even though we had 2 to 3 months of a rise in the markets, what was the moving average doing? The moving average was trending down. So this is like momentum in the market, and the momentum in these markets, if we're going up, then the momentum seems to actually have a point where we actually push it back to the downside. So if there is a strong momentum here, We have strong to the upside, strong to the downside, and then see how this is really overall flat. We're not really trending down. We're not going down. We're not going up. It's flat. This is where this is called now flat momentum, and there's no real momentum. But whenever we start to get this type of momentum here, the market will tend to pull that market with that. And so if we go and have a look at that, but then also I utilize a thing called a 52 on the daily charts. And when I'm looking at the daily charts to see where is a bit more of a shorter term momentum, or 52 is like a couple of months worth of momentum in the markets, it gives me a gauge where's momentum. Because I do know that the best types of trades that we trade is when the momentum is going in my direction. I like to trade with the moving average, which is like with momentum in the markets. So that's what you want to do. That's one thing you can do to start to increase your chances of success on the markets. Now, you want to add a lot. You don't want to just trade based off that. Like you want to stick with that, but then you also want to have a proper system and have a proper plan right behind what you're doing from there. And so the reason why I'm bringing that up is because if you look at the Dow Jones from here, what is happening? We get what? We get a really strong rise through here, don't we? Really strong rise through here, and then suddenly, as you can see, all through this pit through here, even though we had these really significant drops, what was the moving average doing? Trending up. And as you can see through, up through here. So even though we had this drop here for a few weeks, drop for a few weeks, the market was what? The momentum then pushes it back to the upside. As you can see here, when the moving average started to go down through to here, every time we had a rise, the moving average will push it back down. Rise, moving average, which is momentum, which will push it back down. And we go through here, we're getting a rise right now. Look at the moving average, right? The moving average is coming straight down. So the momentum of this market should, even if we get a little bit more upside through here, we're probably going to get something like that. And then we can reassess, is this going to be a significant bottom or is it going to be something like that? Because this could turn into a full-blown fledged bull market. Right, so this market right now, the momentum will drag this market down, and you can see here that that's what we're probably going to see through there before we actually start to see this movement coming back to the upside. We'll start to see in any big bullish environment, we start to see the moving average coming back up again. Right here is when we go, okay, this is not just a bear market, because in a bear market we get these lower highs. But the moving average stays down, and it's not until we start to pick back up again that things start to change from there. And so we can see that through there. We look at the Dow Jones, we look at the NASDAQ as well too. And as you can see, we're getting the same type of thing, right? We get the same type of scenario that through here we had a pretty strong upward trend. But as the moving average kept coming down through to here, as you can see, every time we had a rise, we may have got these strong rises, we end up starting to come down. It wasn't until we started to pick back up through to here that we knew that somewhere through here that, okay, maybe the bottom has been formed and now we're starting this nice big move to the upside. So we're getting a very strong momentum on the downside. So the momentum is likely to drag this back down to the downside because the momentum there. Now, it doesn't mean that the market is going to go to new lows. It may not. But what if this is going to let's look at the scenarios of if this is going to be the big top of the market, the moving average will stay down and the market will get dragged down with it for there. If this is the first leg up in another new bull market, meaning we had a bull market through here, then a sort of a bear market through here, bull market and so on and so forth, then the market will start to create a situation where the moving average will flatten out. We will come down through to here a bit, through to here. We'll start to develop a high low and the moving average will start to go like that there. And we'll start to what's called get higher lows above the moving average. So as you can see, when we're in a bull market, the moving average is trending up and we're getting these higher lows and they tend to be above the moving average. In a down market, we get the moving average trending down and we get these lower highs. They tend to be below the moving average. So it's a bit of a gauge there, a bit of a guide there, as you can see, of what's going on from there. And so we can see all this sort of stuff. Same for the S&P 500. It's the same situation that the moving average right now is trending on the downside big time from here. And we can see what's going on from there. So when we're looking at the short-term momentum here, the short-term momentum is probably going to drag this down. So that's on both scenarios through there, right? Both scenarios through there when it comes to all the different markets. And this is the same for, say, like the weekly charts, right? Whenever the weekly chart moving average, especially the weekly chart, this is the weekly chart 24, you can see here that when we start to curl and round over, this is when we start to get into, okay, something's not right here. When we start to curl and come back up, back into a bull market, right now we're doing this through here, right? And now we're coming up through here. So on a short term, the 52 on the daily, the long term on the weekly is popping back to the upside. For me personally, to have not only to have the chances of having a really good successful trade, but try to have a foundation of having a higher win-loss ratio. Whenever we go through these periods through here, every time we get a drop, if the moving average is trending up, then we want to go with that moving average. And if you look at things like, for example, the DAX. The DAX right now, as you can see, even though this is the German market, but what was the moving average doing? Even though we had this really big drop to the downside, what was the moving average doing overall? Still trending to the upside, right? And then bam, the market pushes it back to the upside. Whenever we get momentum coming to the downside through here, momentum come up and then we'll push it back down from there. So right now, as we currently speak, we can see that we're getting that through there, on that through there. So if I go and have a look at, say, gold right now, gold is actually in a really good scenario. Gold is actually just holding here. So if gold does continue to hold through here, and we continue just to hold, and we get another one of these, gold could be getting ready for another move to the upside. If the moving average keeps coming up through to here, so if the moving average keeps coming up like that through there, and we get another one of these, if we get another one of these through here, and we start to fill this in through there, we could be getting for a breakout and getting ready for another move to the upside. So we're not getting a drop to the downside, we're just holding here. So over the next few weeks, there could be some really good trading opportunities, because at the end of the day, the moving average is still very, very, very strong to the upside. And so the momentum's too strong to the upside. It's just we're a little bit overbought because we get too far away from the moving average from there. And so we can see that through there. And there's a lot of things here, as you can see here. So for example, by looking at, say, the USO market, the USO market is still pretty flat from the oil market from here. It's pretty flat through. Oh, this is, I'll bring up oil on the actual oil chart through here. And as you can see, we're actually starting to break down. But what's happening here? Remember I said before about the 52? Look at the 52 moving average on oil. Even though we're rising through here, look at the oil. This is actually coming back down through here. So this is what you don't want to see, right? The worst thing you can do as a trader is try to go against the moving average, because most of the time, if the moving average is trending in any direction, the market will push that in that direction as well too from there. And we can see here even from say the energy sector as well too, right? Energy sector is actually sort of going through here as well too, as you can see. And then if we go down to our daily charts, which is this one here, what's the moving average doing? The moving average is actually starting to trend down, right? And now we're breaking these lows here. So we could start to see this thing actually have a really strong movement on the downside. So the theme of this video here is the trade with the momentum. So make sure you're utilizing momentum. And on a market update perspective, is that the momentum, if the momentum stays strong on the downside, the momentum will actually start to really move this market and start to pull this market back down with it there. So traders, if you do need some help, if you've been trading for a while and you've done a lot of trading courses and you've done a lot of different things in the markets and you're still struggling with the markets, then you are ideal for my inner circle members, because that's what I'm looking for right now. I have 2 spots left. So if you've liked what you've seen today and you'd like to take it further, then it's application only. You'll be speaking with me. It's a weekly coaching program. I'll give you access to all my trading strategies. And then I'm there every week helping you and coaching you and guiding you through the right systems, strategies, but also the right mindset, emotional management, and so much more that goes into helping you become a good trader. So if you are on that spectrum where you've been trading for a while right now, you've done a lot of different courses, but you're still struggling, I know that I can help you out. So that second link in the description there, guys, or go to getjohntop.com. There's actually an application form there. I've got 2 spots left for that. So go fill that in, guys, and I look forward to speaking to you real soon.